Hi everybody. Hi everybody. This is Harim here. Uh, so this is my first time I'm recording the videos with regard to the stocks and um, investments. So basically, I will be going through whatever the knowledge I have with regard to the stocks and how I do the fundamental analysis of the stocks and how we use that to invest in the company. So basically, I will go through all the slides and also I will be explaining you regarding the details, how with regard to the each and every stock, how we want to evaluate that, and also we will go through some of the fundamental analysis of that. Okay, so starting with the basics is that means what is the share of the company. So what do you mean by share? Share is nothing but means kind of it's a portion of the company uh, which you, if at all you are trying to buy that, you will be called as shareholder, and it's a part of the company uh, where you will be kind of investing your amount to buy those shares. So it's kind of part or portion of a company which you are buying, if at all you have bought that shares with your amount. So I will give you a quick example on that. So let's suppose we have that X company which want to expand their business. So basically what they will be doing is they want to raise the capital to expand their business so that they can uh, purchase any lands or machinery to grow the company and increase their sales. So basically, if at all we can see that example that here they want, if at all they want to raise the capital of 1 lakh rupees, and in total they have 5,000 shares of the company, and they are thinking of allocating 1,000 shares with respect to this capital. So so each if at all you calculate that, the lakh divided by 1,000 is 10 rupees, so it's a 10 rupee per share. It's a price which you will be paying to get one share. The person or entity who buys the share are known as shareholders of the company. So if at all you are the shareholder, you will be eligible to receive a dividend. The dividends is the amount which you will be receiving on quarterly basis or yearly basis. Um, if at all the company board of director decides, and if at all the company is profitable, they decide to pay the dividends to each shareholder. So whatever the company or board of director decides, you guys or shareholders who will be buying the shares of the company will be receiving the uh, amount. So moving on to the next slide. So what is share market? So everybody, as everybody knows, the share market term is given where you can buy or sell the trades of any given company. If at all the company is publicly listed, you can buy those shares using the share market, or else you can buy it from the different market to a kind of unlisted companies, but they're usually that's not regulated by any stock exchange or something. Currently, if at all you want to buy into publicly listed companies, we have, like in India, we have some exchanges through which you can buy those shares. So we have NSE and BSE. These are the stock exchanges through which you can buy those shares. As per companies will list down their shares on those exchanges, and you need to have a broker, stock broker, in order to buy those shares. So like suppose we previously had kind of Share Khan and other stock brokers. So right now there are a lot of online trading platforms like Zerodha, Grow, and 5paisa. So these are the stocks. These are the some of the exchanges or brokers through which you can buy those shares. So the history of the share stock market started when the first stock market was created in Amsterdam, the Dutch East India Company was the first publicly traded company. Yeah, in continuation to that, oh, as I gave the brief history about the stock market, uh, we will be going through the fundamental analysis of the stock now, so that you can get a quick overview how you want to analyze the stocks before you buy them. So I will be showing the different details on the screen. Just yeah. So this is the basics of the shares or stocks. Basically, each company share has its own value, and usually what we see on the portals and everywhere is kind of market value, which we call how the market respect to those shares and how they decide the values. So based on that, that is called as market decided value. So we have different values here. One is a face value, another is a book value, and another is the market value of the share. The face value is the initial value which is decided by the company, and it will be around rupees 10 whenever they decide to uh, uh, give the shares or um, decides to distribute the shares among the shareholders. So if there is a split in the shares, then the face value will be reduced, and in case of bonus shares, I don't think there will be any reduction in the uh, face value. So as you can see in the screen here, so face value remains constant usually. Only in the case where it gets split, basically it will divide the shares and the value as well. And post that, the book value is kind of where it will kind of where we decide based on the assets and liabilities and everything, and whatever the profitability company is receiving, based on that the book value is decided and calculated. So this is a book value is kind of a marking which you want to see if at all you are trying to invest in the company. So whenever I invest, I usually look into the book value of the company, so that I understand if at all it's overvalued or undervalued company. The market value is kind of decided based on the trading and everything, so how people or investor treats this share. So these are all three are different things. And moving ahead, we have the total number of shareholders. Means kind of it will be a kind of number of shareholders who actually bought in the shares or who are currently holding the shares of the company. And it's a market. And moving on to next, it's a market capitalization. Market capitalization is nothing but the total market cap. It's kind of where the market value of the shares is multiplied with the number of shareholders. So it will be kind of in some crores. So I will provide you the detailed example for each and everything. So let me just go through all the ratios here, and then I will explain you all the details on the screen now. So if at all you see here, there is a PE ratio. PE ratio is nothing but the price to equity ratio. It's a market price. It's a ratio between the market price of the share divided by EPS. EPS is nothing but earnings per share. Whatever per share the company is earning, it's called earning per share. And there is a return on equity. Return on equity is whatever the percentage of the returns uh, the share is giving back to the shareholders. It's a return on equity. There is another ratio called ROCE. It's a return on capital employed. It shows how efficiently capital is used to generate the profits. The more ROCE, the better it will be, and same goes with the ROE. And PE also means there is kind of some. We can't say that if at all the PE ratio is high, it's a good company or bad company. But if at all you consider the valuation, then less low PE ratio doesn't mean that it's a good company, but you can think that it's kind of undervalued. So let me just go on the screener so that I can explain to you. As on the screener, I have just opened the share called Asian Paints. As you all know, The company deals in the paints and it has a vast history, and it's kind of very old company, and it's in uh, market from long. So the market cap is around 3 lakh, uh, 119 crores. So you can see the current price is 3,136, and it shows the highs and lows of the share price, and you can see that stock PE. So it's kind of a ratio you want to see where the current price divided by the earnings per share. So it's kind of 59. It's kind of very uh, huge, but the company is kind of highly kind of, it has some market monopoly, and so that's the reason, means we don't consider this kind of PE as a huge or something, but it's kind of fair valued for the company. But whenever whatever the PE is, means if we usually consider, I usually consider the PE below 10 is kind of where I think of investing. But uh, uh, there should be, the condition is that we should be considering the earnings per share as well. If the EPS is high and the stock P is still low, then I feel that the company is undervalued. You can see the book value is around 173, and the stock is trading around 3,136. It's around 20 times. Yeah, it's around 20 times, around 15 times, 15 16 times of the book value. So for me it's highly overvalued, but as you know, the company has a lot of potential of growth, and consistently company is kind of has very good reputation and kind of have market monopoly. So that's the reason I consider it as a good value to invest and to stay in the for the longer periods. You can see the dividend yield is 0.82%. So basically, it will be based on the face value of the company. So it's 0.82%, whatever dividend you will be receiving. I won't be touching on that point right now, but I will be going to other ratios. But the dividend yield is whatever the dividend you will be receiving against your investment. So you should be thinking in that perspective. ROC is around 34.4%. That is very very good, and they are kind of infusing the capital and making good returns on that. ROE is very good, so it's around 27.7%. So if all you are invested in company and the company is giving you consistently 27%, then I think it's very well. It's kind of have good potential to grow in future as well, but we can't say. But I see from the past history, the ROE is very good. As you can see, the face value is 1, so it might have split multiple times. So that's what I can say. You can see the EPS, it's an earning per share, how much company is earning per share. And here we can see number of equity shareholders. So it's 95.9 crores. So if at all you multiply this 95.9 with current price, you will be getting the market cap. And you can see the industry P means Asian Paints. It's in the paints business. So the current industry P is around 51.2. So people value these companies. I mean, these companies are kind of highly valued, and kind of business is kind of very sustainable, and kind of it gives a lot of growth. So that's the reason the P is around 51.2, and the price to book value is around also 7.07, but here you can see it's around 16. So it's above, very well high above the industry book value ratio. Pledge percentage is nothing but whatever the share has been pledged by the promoters. So it's around 6.5%. I usually means I don't like this if all the shares is pledged by any of the company, but sometimes they have to do this in order to pursue the growth. And if at all it's negligible, I prefer that. But if at all this it crosses 10 or 20, I avoid that stock. You can see promoter is kind of holding 52.6% of the shares of the company. So I feel this is a good sign. And we can see the gram number. Gram number is just I use it for the valuation purpose. So based on the calculations of assets and all those, we have this gram number. So these are kind of basics of the stocks. I will go